All right, hey there. Good afternoon, everybody. I guess good morning, good afternoon. Pretty close, right? It's a few minutes after 11 a.m. Central Standard Time here on Friday, the 8th of October, 2021. I'm Christopher Inks with Texas West Capital, and we're going to do our bi-weekly look at the markets here. Right now, on the heels of the non-farm payrolls released today. I've got some thoughts on that. I know everybody sees that and probably go, oh my gosh, it's terrible. So we're going, down to Hades and whatever, and they're never going to taper and all this. But I've got some other thoughts on that. So we'll talk about that there. Bitcoin kind of pulling back a bit still, getting ready. So close to 60. I think it wants to get there. So we're going to take a look at that as well. And a few other charts. Who's here already? Peter, what's going on? Good to see you. Boris is here. Telltale checking in from Romania. He says he needs to go, but after 22 p.m. I watch like all usual. Well, I'm glad to see you. Say hello there, man. Alex, what's up, man? Let me see here. Yeah, man, it is good to see you. Been a while. Yes, you must join these more. Definitely. Hey there, Data. Good to see you. Oh, man, always the blue on blue. I think I know who that is. Patrick, yes, it is you. Hello, good to see you. Andrew is here. Telluride. TV Canal is here. And Hobby Dons, which is Ari. What's going on, guys? Good to see y'all. Hey, listen, if you haven't joined us yet, what are you waiting for? You can do so at howtotradetowin.com. I posted a couple of comments here that we've got recently because, man, it's just been absolutely crazy. I mean, I can sit here and I can tell you all day long about what we do and how much we have. But at the end of the day, until you come in, you just don't know. And you might think I'm just there blowing some steam up your rear end, right? We had one member here just joined 2 days after he joined, man. He says, it's insane. It's absolutely brilliant. Incredible amount of educational content. So many daily intraday updates, chart requests, and the people, there's the key, guys. The people are fantastic. Willing to help and so kind, man. I agree. Exactly, man. I keep pushing that. That's what it's all about here. But anyway, yeah. So, we've got these great things. And by the way, guys, if many of y'all are from other countries and whatnot. English is not your native language. Please don't ever feel like you have to apologize for your English. I'm going to tell you what, most Americans, most citizens here in the U.S. can't speak proper English either. So, and you're doing it on multiple languages, so it's all good. But we had that, and then a couple other members decided that they wanted to let you know what they think as well. We've got Aramis right here. Joined last October, September. So much more relaxed and clear-headed. Continues with us because he loves to learn. Plus, there's so much info you can't study it all with a full-time job. And then, of course, Droid Doctor here came in about 2 months ago. Says, I'm a no BS guy. Tells you how it is no matter what you want to hear. That's why you join. Usually don't pay for stuff like this. But the educational content is very good. The community is super. Again, guys, I keep telling you, man, we've got fantastic people in our community because so many of them have been with us either from when we started just over 4 years ago or even for the last 2 years. I mean, everybody stays with us usually for quite a while. But even if they don't, let me show you some here, guys. I had this great comment here. Oh my gosh, where'd it go? Right here. He says, the only guy doing a paid group or course that obviates the need for you to remain a member unless you want to stick around for the community. 6 months with me, and then they cancel their membership. They said they make more money, sleep better, and look at the charts less. I am the truth here. So, I appreciate stuff like that, guys, because that's exactly how it is. I don't want you to stay if you don't have to, but while you're with us, I want you to get as much as you possibly can out of it. Because as long as you're willing to learn, you're going to be able to learn. There's so much information, guys, so much stuff. And I don't tell you that you have to trade this certain way or that certain way. I say this is how you do these. There are some truths that remain evident throughout trading, such as risk management and its importance, and emotions and the psychology of it, and all that stuff, and how and why the markets move. All that stuff is the same across all different styles of trading and whatnot. But then I go in there and I teach you, listen, if you're going to do Elliott Wave, this is the proper way to do it. If you're going to do Wyckoff, this is the proper way to do it. If you're going to use these indicators, this is the proper way to do it. Here's some ideas of how you can use these indicators to find, to create rules-based systems to allow you to enter and exit without using emotion. You just go, okay, does it check off box number 1, 2, and 3? Okay, well, then we can enter. There's always something for you to do there, guys. Tier 3 is absolutely where it's at. Get access to it all. So anyway, we'd love to have you there. Howtotradetowin.com. TexasWestCapital.com coming soon. Don't forget Alpha Trader, guys. We're going to let you know what that is here probably within the next 2 weeks or so. So that's coming up as well. By the way, if you're tier 3, you might have noticed this morning, I've added the short list, the short squeeze list. This is something I mentioned that we were going to be doing. And so as of this morning, we do have that. So that's in there for tier 3. Look for it under the members channels. It's got the little star by it, but it has a list of the top 20 short squeeze prospects for stocks for you to watch. And that thing will be updated throughout the week, each week as the list changes. And that way you've always got a fresh perspective if you're looking to get into some stocks, potential short squeezes there. That doesn't guarantee that they're going to get squeezed, but what it does is it uses the the information that's coming with it, the float and all this kind of stuff to figure out what is most likely to squeeze if it's going to squeeze. So it gives you a heads up on that, all right? So anyway, hopefully you guys will find that valuable. Got more stuff coming as always. Kimosabi, what's up? Madi is here. What's going on? Michael is here. Droid Doctor, speaking of which, there he is checking right in there. Chris Day, speaking of people that have been with us practically since the beginning. Chris Day checking in. And Brian Riley here. He says, people are expecting 2022 to be a huge year in crypto. Not if the economy stalls, though. And I agree, guys. This idea that crypto is going to continue to explode and just do gangbusters when the rest of the economy is, kind of rolling off a cliff and whatever. I can't guarantee, guys. Nobody out there can guarantee what's going to happen, but it doesn't make a lot of logical sense. Cryptos, whether you want to believe it or not, guys, cryptos are extremely risky. Those moves that you come in for that you hope to go on the upside, but that you often get on the downside, that big volatility, that makes it risky. And when the economy is going down, the last thing people want to hold are risky assets. Bitcoin's one of the riskiest. So, and other cryptocurrencies. So, if the economy's going off the cliff, if the economy's rolling over, it seems to me that the last place people are going to really want to be is cryptos. Now, that doesn't mean they're going to get out right away, because you're going to have people that are going to try and hope, they're going to hope that it's going to continue to go up and whatnot. So it could linger on a bit, but I think at the end of the day, it's not where people want to be, when the economy's going off. You always, you guys often ask me, well, why do we expect the dollar to go up if the economy's not doing well? Well, one of the things that you're doing is when the economy's not doing well, people tend to run, again, it's the flight to safety. And part of that is that, first of all, that if you're holding debt, when you think in terms of bigger consumers of the US dollar, I guess you could say, if they've got to pay US debt, they have to pay it, by law, they have to pay it in US dollars, period. They can't pay it in liras or euros or whatever. They have to pay it in dollars. So they have to exchange their currency for dollars to pay the debt. So if the value of the dollar is rising, then the cost of their debt is rising, because it's going to cost them more to buy those dollars to pay off that debt, right? So everybody runs to it. But the other thing is, just like you and me, every regular person out there, if the economy starts teetering and starts going the other way, most people want to get cash. They want to get cash. They want to hoard cash, because you don't know what's going on. You want to have some kind of cushion if you can. You start selling off stuff. And so there's why you get that run on dollars when the economy doesn't do so well like that. The same thing, again, we saw back in, back in March of 2020, if we zoom out here, this right here, this big run up right here, everybody jumping to dollars when everything kind of rolled off, right? And then as the year progressed after that, everybody went risk on, the stock market rose, and, Bitcoin rose, and the dollar then kind of came on back down, right? And so now we're looking at this. Again, this is still from the newsletter. This is the big picture here. We were up here. I said we're looking for a bounce out of the green zone. I said if we can rally out of that green zone and, continue to make new highs there, that becomes bullish. We've got this blue zone right here. And so the swing zone right here from swing low to swing high, the target based on the height of that is up here at 97.77. Potential macro bottom here back in January of this year. Again, remember I said oftentimes these major currencies, they'll get their macro reversals in January of the year. And so far we continue to rise higher here, so we'll see what happens. But breaking out above this 94.795, and this is on the dollar futures here. Okay, this isn't the DXY. This is the dollar futures, actually, which is why it's a little bit higher. I think on the DXY, it's like 94.74 or something like that. But anyway, it's this swing high right here from about the 25th of September of last year. If we're breaking it above that, that's your first step in confirming that macro bottom. You should start feeling decently bullish about it at that point. Doesn't guarantee it can't come back down, guys, but that's the first step. That's the first thing you're looking for it to break out above. And so, this is kind of where we're at here right now. You got this nice ascending channel here. You can see that we bounced off this channel EQ. We pulled back, bounced off it, and this ascending channel resistance here. And so looking, to make its move up, right? There's a lot of people out there who don't want to believe it because they listen to a lot of the nonsense about, money printer goes burr, and that means hyperinflation and all this other stuff. But you know what, guys? I'm going to tell you right now, if you want to be a good trader, you've got to get off those sound bites. You absolutely have to get away from the nonsense that you see in social media. All right? There are a lot of people making a lot of money telling you how to trade with little to no experience because they're good at marketing. They're good at marketing, guys. You need to be careful about that out there. There are a lot of them. Then they've really sprung up here in the last, year and a half with the whole pandemic thing and whatnot, and everybody's at home. But most of these people that you're likely following online because they have big followings haven't been a trader in a bear market, in a big economic recession, much less more than one. And so I'm going to tell you right now, you can say, oh, it don't need to be. Yes, you do. There's a lot to learn actually going through it. You get to understand, you get that feeling when you rise up into it and then you go through it and then you come back out, you get to feel what the market's going through. You get to see how it gets euphoric right before and then how it's depressive down at the bottom and how those things, lead to price movement as it does. Otherwise, it's just theory. It's just talk. And like most things in life, until you experience it, it's really hard to wrap your mind around completely. So just be careful out there, guys. I'm not saying don't, stop following people, whatever, and I'm not calling out names. I'm just saying that if you are trying to be serious about being a trader, or many of y'all maybe not really want to be a trader, you just want to make money, right? In either case, you've got to understand what's going on out there. There's a lot of, you can learn to trade online for free. Sure you can. But there is so much bad information out there, half-truths and outright lies that when you don't know what you don't know which of that is true and which is not. And most of it, I don't think, is people actually wanting to purposely lie to you, to make you think that this is how you do it, just to get you wrong or whatever. I think it's just because, again, as I said earlier, they're very little experience. And they found that if they market right, you're going to eat it up. If they tell you what you want to hear, you're going to give them the money that you have. And they don't care because they're making their money from you coming in and everybody else coming in. There aren't many trading communities out there, guys, where people stay in for 2, 3, 4 years like they do with ours. But there's a reason that they do with ours, okay? So hopefully you guys will join in. We'd love to have you there, even if you're just coming in for a month. I mean, there's so much there. Just all I say is if your plan is just to come in for a month, just come in ready to soak it all up. I've got well more information than you can handle in a month. But you can get more than enough from there to at least get started correctly as a trader. Or to maybe, if you've been trying to trade, to maybe clear out some of the bad information that you've been fed or that you found over this time. Yeah, of course we'd love for you guys to stick around and everything, but at the end of the day, I just want that if you're going to come in, that you're serious about making the most out of it. If you're only going to come in for a month, that you're serious about making the most out of it. Otherwise, don't come spend your money, guys. Money is good. You're going to find it's going to be harder to come by soon here, I believe. And so I don't want you wasting it. And if you're not serious about coming in and really taking advantage of what we have here, then it's going to be a waste of your money. And that's not good. That's not good. Okay? I don't want any of you all wasting your money on anything, much less what we do. So that doesn't mean we don't want you. We definitely want you. But I'm trying to get it across to you that I definitely want you guys to be prepared for how much content is there, and just to be prepared to spend a lot of time soaking it up so that you can, even, like I said, even if it's only a month, that you can actually get as much out of it as possible, all right? Let me see here. Let me catch up with you guys. Who else is here? Let's see here. Tellurrider says he's here for the tech anyway, so he's excited. There's plenty of other things to trade. There is, right? King Crypto, what's going on? Good to see you here. WhiteR21 checking in. Boris says Forex trading after crypto goes down. Yeah, a lot of our members, guys, are starting to really find the benefits of trading legacy markets and Forex markets. Those of you that know me, you know Forex is my baby. I love Forex. And so I love to see that our members are expanding their views out of just crypto. Many of them just came in trading crypto. And now they found all this wondrous new area out there trading, metals or commodities or futures or whatever else it happens to be. So that's great stuff. Andrew says most news are lagging indicators. They are exactly. The charts usually tell you what's coming in before the news does. So yeah, but it's the best way to understand that is that news and price action happens all the time, guys. We only tend to put together that news and price action at some point that it's significant to us, that when we're paying attention is doing something. Because if you look back historically, a lot of times you're going to get the same type of newsprint and you're going to get a different reaction with the market. And then there's going to be all these different excuses of why. But at the end of the day, it's because news isn't what's really driving the market. News is this thing that comes in afterward. It can give you a temporary move like this morning with the NFP release, but that's all it is. Temporary, knee-jerk reaction. And then things flow back to the way they were. So yeah, we're going to talk about that NFP in just a minute here. Esteban, what's up, buddy? Good to see you checking in. Let's see here. TV Canal says Bitcoin intraday looks like a little dump is coming. Yeah, we'll talk about that 1 minute here. ARM, what's going on? Hunter is here. Who else is here? Is that Diego? Yeah, the other blue on blue. Let me see here. TV Canal, haven't you been saying it's time for a dump for a while now? You said we were at the 70.5 from 65. I think it's time for a dump. Possibly, but I don't know, man. 60 is right there within arm's reach. 60 is so close. So, yeah. We'll kind of see what they're saying there. Boris says, I can vouch for the information volume in TWC. I appreciate that, man. Let's see here. GT, what's up? He says, I found a perfect Wyckoff accumulation number 2 on SHIB of the 15-minute last night. Today is an epic day. Hey, man, if you got in on that, you made you some money, man. Congratulations. I love hearing that. But anyway, so here's what we're looking at. And as you can see, we're getting this recovery here. If we jump back into the DXY, so we had this dump coming off here on that NFP release. Because what happened with the NFP? Well, as I posted here this morning, let's see here. What is here? Here we go. NFP was the release was weak. The consensus, remember, they were looking for 500,000 jobs to be added. We only got 194,000. But the August numbers were revised up from 235 to 364. So there's a big positive. Unemployment rate surprised huge. It was at 5.2. Consensus was to drop to 5.1. It actually dropped to 4.8. So that's huge. Remember, it's not so much the jobs number as the unemployment rate that what the Fed is looking at. So that was a huge drop, surprise there to the downside with that unemployment there. Taper, I think worst case scenario, I think taper is put off until December. But honestly, guys, if we look at it, 500,000 jobs really was kind of a stretch. And I think we all kind of knew that. And so, we still added jobs. We still added 194. And we revised up 130, was that 129,000 higher there, which is over 50% higher there for August. So, I mean, and then on top of that, the unemployment rate dropping to 4.8. So for the things that the Fed looks at, I think there's still a potentially good chance that we get taper in November. But like I said, I think, worst case scenario becomes December. Excuse me, sorry about that, the hiccups there. And at the end of the day, guys, the reality is that the U.S. economy is still doing better than most. Remember, when we're talking about the dollar versus other currencies, we're talking about economies, right? We're talking about one economy versus another. And so it's not that your economy has to be doing great, though the U.S. economy is still doing pretty dang good compared to the others. It just has to be doing better than the others. There's that big adage about, if a bear is chasing you and your buddy, you don't have to be faster than the bear. You just have to be faster than your buddy, right? And then that's the same idea with with what we got going here. The U.S. is on this faster tapering potential here than most other countries. Our growth rate is what was it? It was huge compared to the euro, right? The eurozone over there. And so when you're looking at those things, you take all that into consideration with what's going on there. And I think the dollar's the play. I think the long dollar is still the play. We got a lot of people still arguing and fighting it, but man, guys, they've been fighting it. Look at this. Let's go back to the daily here. They've been fighting it since January. What is this, January 6th? Yeah, January 6th of this year. It's been almost a year. The entire time saying it's going to fall, it's going to fall, it's going to fall, and it continues to rise. Now, again, that doesn't mean it has to continue rising, but what I'm saying is I don't think that a lot of your online people really understand enough about economics and what's going on in global financial systems and what's going on with taper and bonds and treasuries and these things that I continue to elaborate on, not just here, but in the market breakdown every Monday, that newsletter that I send out for free. I don't think we got a lot of people really grasping, catching in with that. So right now for the dollar, I think, we're getting a rally here off the pivot. It's in three waves. If we're breaking out above this 94.336, that gives us a wave parentheses 3 target up here, minimum at 95.198, which carries it above that 94.734 area. That's quite a bit bullish there. Now, if we drop down here below wave circle 4 at 93.678, that means we're going to have to look at it a little more and see, is wave 4 still playing here? Is this A, B, and then this is work its way down for 4? That's a possibility. I don't think that we would have to see how it does after that, how far it continues to go to really kind of say, okay, maybe that top really is in. But I think, if you're just dropping down below there, you've potentially got 5 down, maybe you can make this 3 up, and this becomes a 1, 2, and then you get a 3, 4, and a 5 coming down here, right? Which just means it's temporary. So, if I'm looking at that, I don't see anything jumping in here with the dollar right now that's really kind of changing anything that we're looking at the moment. Hey there, Crypto Girl. Good to see you. Let me see. Andrew says maybe something to watch. People living off state funding, having trouble affording food and other living expenses. That's the same. That's the thing there. The same thing I've been talking about this year. We've had some extensions on things. The mortgage moratorium, student loan non-repayment moratorium, all that kind of stuff. Kind of kicking the can. Everything's kicking the can down the road this year. Have you noticed? So student loans don't have to be paid now until the end of January, right? And they say that's going to be the last time, so we'll see. The mortgage moratorium, that's still in effect for a lot of places that were hit. What the federal government decided were hit pretty strongly by the Delta variant of COVID. So that's, even though it's kind of for everybody, it's off generally. For a lot of places, it's still on, right? Of course, we had those unemployment benefits, which were cut, right? All that extra unemployment benefits that we had for the previous year were cut this year. Government funding extended to December 3rd, right? So government was going to face a shutdown. They kicked the can down the road to December 3rd. So they've got until then to kind of get it together and figure out, the whole government payments. I can't think of the word I'm looking for right now. The spending bill, right? And then now, just recently, we were talking about the debt ceiling coming up and the importance of the debt ceiling because, again, if the debt ceiling's not raised, the Treasury, Yellen and her Treasury have no ability to continue issuing debt. No more treasuries coming out, right? So all that cash sits with those primary dealers and at those banks, and that provides all that downward pressure on the front end of the yield curve. Guess what, guys? You don't want that going negative. So the reverse repo comes in, and then that way it gives cash somewhere to go to make this tiny little return, but it's something, right? And especially if you're a commercial bank, because when you're taking deposits on, you have a federal, legal responsibility to pay that interest, right? And you're not doing it by giving out loans. We know loans are down. So, all that money's kind of sit there, pulled there, all that QE money. Y'all think it comes out to us. It doesn't come out to us. It only comes out to us when banks make new loans, right? Otherwise, it stays with your primary dealers. It stays with your banks, and and then you get this big, huge thing with deposits and how that affects, what's going on. And so there's this huge thing. And so if we can't get these treasuries, if we can't raise the debt ceiling, then the weight of that QE, because remember, even tapering, all they're doing is removing a bit of it. So if they're normally, if the federal government, or the Fed is normally buying 125 billion of something, every month, tapering's going to take $5 billion down. So they're still buying 120 billion. So still more cash going into your primary dealers and your banks and all that, pulling up there. And that continues, the more cash that goes there, the more pressure it puts on the front end of the yield curve. That's your short-term rates. The purpose of the reverse repo facility is to support that, to give a specific rate that says, listen, this is where it is. So it doesn't go below zero. And that's what they're doing right now. But as I told you, all it does is it keeps things from getting really bad. It doesn't actually fix anything. The only way you fix this is to get you and me to take out loans from your banks, guys. Because that money then flows from the Fed through the bank to you. And now you start getting all that Fed printing out into the public. That's how it happens. So all this nonsense about QE means, hyperinflation, whatever, just people that don't understand how it really works. Right? And so I don't want y'all to be one of those people. One of those people. Don't you be one of those people. Anyway, seriously, guys, I want you to be, more well-read on what's happening out there so you can get a better understanding of everything. But yeah, I keep telling you guys, Stephen Van Meter is a great place to go if you don't know a lot of this stuff. He spends a lot of time explaining it, a lot more time than I do. Not that you should go, just forget about me, but really, there's a lot of information he's put out there that you can access that'll help get you real grounded with what's going on potentially with everything here. Now, at the end of the day, just because we understand how the money's flowing, however, it doesn't mean that we know exactly what's going to happen. Okay, I don't want you to think that. I want you to think I'm sitting here telling you this is exactly what's going to happen. There's no guarantees in trading, guys. There are so many moving parts in this global economic and macroeconomic and global financial system that it's too hard to know as human beings exactly what the final result of things are going to be. But we can get a general idea based on what we do know about things. And until those are proven wrong, I think you go with them. A lot of the things that the Fed thought for the last 20 years, what's his name? Jerome Powell is saying right now we have to go rethink that. What's his name before him? God, I can't remember his name. And he said the same thing, coming back off of those things that came in previously. The whole idea that, about low job, low unemployment and growth and stuff like that. I mean, all this stuff has just been proven wrong here lately. So it behooves you, if you're a trader or investor, guys, to really do what you can to understand this stuff. You don't have to at the end of the day. You can just trade. If you learn how to trade the charts properly, you can do that. But it's going to give you a lot more security within yourself when you're trading, because you have an idea of what's going on. It's not just like, oh, wow, I didn't expect that kind of thing, So just some thoughts there, guys. Let me see here. Yeah, I tell you, Ryder, DXY low there, January 6th. That's right. Daniel Davis, what's going on? Good to see you there. Eder says, new prime minister in Japan. The Nikkei is not responding so well. Kyle, what's up, man? Nice to hear a voice of reason. Well, hey, I appreciate that, man. At the end of the day, guys, I've said this before. I'll say it again. I'm neither a bull nor a bear. I'm just long money, right? Isn't that what it's all about? By the way, that's coming soon. You guys are going to see that everywhere. Good stuff we pick up here, right? Hey there, Claudia. Good to see you. W, what's up, man? He says, what do you think about this NFT craze? It's inflated, but the tech is here to stay, just like Bitcoin. Yeah, I think that pretty much sums up what I think overall. I'm not as well read into NFTs as a lot of other people are, so I'm going to tell you guys that right now, all right? But generally, in terms of markets, it does appear to be frothy and euphoric right now, okay? Now, is it something that will remain? I'm still trying to get to that point where I can say, yeah, it's, I really feel like it's going to. I think it will. I think there's a lot of possibility in it. But I think a lot of what's going on right now is just frothiness in the market. So I would love to see it kind of stick around, though. I think it's cool that we have stuff like that, guys, because at the end of the day, I'm a technologist. I'm an early adopter of a lot of technology. And so I love when we get new stuff like that, even though it may not, if you guys just kind of half-ass listen to what I say, it may not seem like that at times. But I do. I want it to work. I want guys, you know what? I get so many people say, oh, you're such a Bitcoin bear and all this. I've never been, generally a bear in Bitcoin. I've been very bullish about Bitcoin overall. I just, when the markets are making certain things happen at certain points, I'm not stupid enough to ignore it, right? But, sometimes you're going to be wrong, sometimes you're going to be right. But at the end of the day, my long-term thesis is that Bitcoin, I think, is still going to survive, is still going to continue to do well. Same thing I've been saying since 2017 when I got in here. We'll just have to see how it gets there. That's the thing, guys. How does it get there, right? Let me see here. Andrew says, let's see here. It appears on most larger market cap, alts are looking bullish against Bitcoin. Maybe Bitcoin moves sideways for a bit while we have a mini alt upward movement towards a high RSI. I think we're going to have that, but I don't think just yet. So again, guys, here was my chart that I put out with the weekly, with the market breakdown there. Did I put this out this week? I think I did. What was it, the 4th? Let me see here. Yeah, the 4th, because it was this candle right here. And I mentioned all this that's going on. I said we got 3 down, so we should, and then we broke out above the second wave here. So that should indicate that we're heading higher. I gave an initial target right here of 55,430. Again, guys, you don't have to believe me. You can go look for it yourself. There on the market breakdown there. By the way, that link, in case you want to check it out, or heaven forbid you actually sign up for it, is right here. And or you can jump on with me there on Twitter, on my Twitter profile there at the top of it, right under the bio, is the link right here. You hit this link right here and get on with it. Get on with the 346 smart people who are joining in already. But you'll see this in there and my thoughts on it. Again, noted that high supply continued to come in at the 2 lows, but on the second low, there was no follow-through. High volume, no follow-through. Instead, it went the other way, broke out of the channel, gave us our target there, and that's where we've done. So we're there as it is. Locally, I'm kind of looking at this, okay? I'm looking at wave parentheses, or wave Roman numeral 3 here in progress, okay? Now, it depends on how we look at this here. Potentially a triangle here, A, B, C, D, E, ends wave 4. And then from that, potentially wave 5 could end. Wave parentheses 5, so all this right here could actually end right here. But I don't think so. The other thoughts are that wave 1 of wave parentheses 5 terminate here, and we've got wave 2 in progress. Now, we've already pulled back to the 85.4 here. We could maybe look at this as an A, B, and then 1, 2, 3, 4, 5 here. So what we're looking for is a breakout above 55, 610, and 67 cents here on Coinbase. Whatever that is on your particular exchange, you're looking for a breakout above that. If we can go from here, find support on this pivot here, and rally up above that, that says 1, 2, and then that gives us a 3 up here around 58, 120 or so. That gives us a minimum 5 of 5 of 5 of 3 up here at about $59,080, $59,090 kind of area. But the thing about this is that if we jump out here to the 1 hour, is so gosh darn close here to the R3 pivot, which is right there around 60,000, that I think we'll actually get to that 50,000 there. I think we'll actually get here. You know, for right now, we remain within this nice ascending channel here. So that looks good, right? It's a nice movement up. Here's the thing. If we do happen to continue to drop down below this this point right here, this 53, 634 and 41 cents, that will say again either that wave 5, you know, of 5 of 3, whatever is done here and we're pulling back, or it just means that maybe we've got, instead of a triangle for 4 here, maybe we've got an ABC down and then an ABC up, and then maybe we're getting 5 down here. And in that case, we'll be looking at potentially a target right here at the 15-minute S1 pivot right around 53,000, which may get you close, depending on how long this takes, close to this ascending channel support. But then that would still have, you know, wave 5 potentially looking up here around that 60,000 level. I think we're pretty darn close to it. I think price wants to get there. But, you know, we don't trade on what we think. We just trade on what happens, and so we'll see. Right now on the 15-minute, we do have lower lows in price. We've got lower lows or higher lows here on the oscillator, on the RSI. So we've got bullish divergence coming off at that pivot support. You know, it really makes it look like this may just be a 1-2 and ready to head up there right now. Okay? So that's kind of what I'm looking at for Bitcoin, guys. That's exactly what I'm looking at there. Let me see. What else you guys got going on here? Any chance I can look at Clove and give a 5-minute live insight into what you see? Yeah, remind me here in just a bit, okay? Ari, remind me here in just a bit. Let me get through this other stuff, and then we'll kind of talk about it. Yeah. And is Clove, Clove, is that a, I don't even know anymore. I've got so many going through my head. Is that a crypto or a stock? Wait, let me see. You're saying possible break. Oh, Andrew, you're saying possible breakouts on alts against Bitcoin is what you meant. Yeah, like I said, Andrew, I think if we're gonna have alts again, you know, breaking out against Bitcoin, I think it's gonna happen. Really, once we kind of get up here to this 60,000 area, when then we do that bigger pullback for wave 4 here. I think so. Yeah. Let me see here. Oh man, all y'all asking a whole bunch of stuff here. Let me get through all this other stuff, and then if you remind me, I'll see what I can do about looking at these guys, okay? Kyle says, I think NFT plus games will be the biggest out of blockchain. I think that's a good thing too, Kyle. That's what I talked about, gosh, probably about 6 months ago, maybe. I was thinking that maybe that would be where NFT is going to get its big push from. So yeah, I think you're correct, man. Kyle's mentioning Star Atlas on Sol blockchain is groundbreaking. And of course, you know, we've got what is that other stupid game? I cannot remember. But they're huge for a gaming company. Their valuation supposedly is something like, puts them in the top 10 gaming companies in the world or something. What is it? Oh, it'll probably come to me here in a bit. If y'all can think about it, you can remind me. So yeah. W agrees that that Atlas is going to be huge. So, but yeah, man, Ethereum, guys, exactly. Yeah, you know, Ethereum, man, God, those gas fees are so huge right now. It makes it difficult to really speculate well, right? If you're just looking for speculation there, or even just anything that takes, you know, Ethereum there, it costs so much right now. So yeah, we'll see. AVAX, that's what it was, I think, Kyle. So I appreciate it. Let me see here. Andrew believes that online gaming is going to ultimately change with NFTs as well. Businesses will ultimately change with NFTs. Great ways for companies to connect and earn with the early generations. Yeah, I think there's a lot of possibility out there, for sure. You know, again, guys, I am not as well read into NFTs as some of you other people are out there. So I am not the definitive resource on that. But, you know, again, I've got a lot of hope for it. I really need to sit down with it personally. Not sit down with it personally, but, you know, I personally need to really sit down with it and kind of go through it. I haven't had a whole lot of chance with everything we do at TWC right now, everything we're preparing to launch. Yeah, we actually opened an NFT channel in Discord, guys. A lot of great information going on there. Hangry Patrick, yeah, it may be that Axie may be the one that I'm thinking of. I know Avix was one of the blockchains, though, for sure. Yeah. TWC commit exclusive NFTs for lifetime memberships. Man, you'll have to get with me and let me know how that would work. I may not be, I don't know, lifetime memberships? That would have to be a convincing thing you'd have to give me there. But if any of you guys are into NFTs real well and you've got some idea how you'd make that work, talk to me, man. I'm always open. I'm here to, to figure it out with you, right? Let me see here. With the weird chubby cats you breed in battle. Not me personally. What do I think of Shiba Coin? I think it's just like anything else. It's just going up. I don't know that it's necessarily anything special. I think there's a lot of hype from people getting in late into crypto with it, and it became that hype thing. But I'm not really sure that it does anything so spectacular that it needs to remain anything special for any amount of time. But that doesn't mean you can't trade it, guys. I keep telling you this. A lot of people don't understand this. When I talk about a crypto maybe not doing so well or something, or stocks or whatever, it doesn't mean you stop trading it. It just means that I think, long term, there may be some issues there. Maybe there's nothing there that I see that makes it special, anything super special about it. But, when the cryptocurrency market is euphoric and everything's rising, you can still get on. I mean, you can still trade the heck out of it, guys. You just have to have don't lie to yourself about what it is. Understand that it may just be a shorter term trade. But a shorter term trade, you can make a lot of money off because everybody else coming in thinking it might be something long term. And so what? Sometimes you'll be wrong. And maybe you won't get everything with it. So what? I think a lot of times y'all come in and want to be, you want to trade, but yet you're in this investor mindset. So everything must necessarily go up for you at all times. Otherwise, you're like really depressive and really take it hard. But, again, guys, if you're traders, all you care about is the volatility. You don't care that the price is making some kind of 52-week all-time high, other than the fact that means it's in a strong trend and you can continue to trade to the long side. But, as a trader, guys, it's a big difference from an investor. Trader, man, you're just looking for movement. That's all you're looking for. Doesn't matter if movement up or movement's down, as long as you can get in on it, right? So if you find yourself in that position, guys, think about what I just said there. Let's see if you can get yourself out of that thinking so that you can think properly, so that you can learn to take profits on trades that you should be just learning to take profits on, rather than trying to hold them, even though you said it was a trade, but you're trying to hold it as an investment and it goes the other way really ridiculously, and all of a sudden you become a long-term holder, or you exit at a significant loss. I don't want you guys doing that, all right? There's got to be careful out there. What's my target if we break 65? When we break 65, you mean? For Bitcoin? Again, I've got that 79, what was it, 79.4 target up there. Oh, I don't have it on this chart. Let me see. There, 79.440. But it just depends on what goes on here. I went over I think in Tuesday's stream, I went over how it could, if it follows similar paths to the previous two cycle highs there, in 11, 12, and then in 13, 14 there, we could see it rally on up to, 150 or 240 or whatever. But I don't think that if you copy exactly what happened there and you expect it to happen exactly the same way. History often rhymes. It doesn't repeat, though, guys, okay? But I think there's, depending on how it plays out, if this is the end of this bull run, this, as it normally is at the end of this year here, right, then we can expect over the next 2 months to see price appreciate quite rapidly and quite far. I think overall, once we're breaking 65, I think we've at least got a, mid-90s, 94, 95 at least. If we're overextending on the way up, if we get something similar to 2017 or 2013 or 2011 or whatever it was, I think, it could go 150, 180, maybe even over 200. But that's just going to really depend on how it rallies on up from our this 28.8 low over here. How does it rally on up from there? How does it overextend along the way? Yeah. Hey, Kyle, have a great day, bud. We need to have a top TWC contributor 2021 badge NFT. Oh, see, that's sounding interesting. Guys, I'm dead serious. If you've got ideas, send them my way, man. I'm all about making it as fun as possible and doing what we can, guys. Those of you that have been with us for a while, we've got the suggestions channel, and we do most of the suggestions. We can't always do them all, whether it be for logistical reasons or otherwise, or time reasons, or just that maybe it's not going to be as big a thing as what you may think it might be. But we always look at it. We always look at how can we implement it. Again, I am not as well read on NFTs as maybe some of y'all are. So if you have an idea, something that you think it would be cool that maybe we could do, man, hit me up, send me a DM over in Discord, and I'll get back to you as soon as I can, and just kind of outline it. Say here's what my thoughts are. Here's what I think we could do. Here's how we might be able to go. How you might be able to go about it. And it gives me homework. You're going to force me to get into understanding NFTs a lot more than I do at the moment with that. So yeah, good times, right? Hey there, Merv. Good to see you. Says, personally not touching NFTs till the bear market. Till then, I will educate myself what to pick, what not to. I'm going to watch the market and execute in the bear market. Yeah, and I don't think it's necessarily a terrible way to go about it either. Again, I do believe that the market itself is quite frothy right now, euphoric. That doesn't mean it can't stay frothy for another couple of months, though. Okay? Don't get into NFTs just because you saw somebody say, hey, listen, I minted this for $300 and sold it 2 hours later for, 200,000. I think that was what the tweet was going on there. Because you're not seeing, I would go out there. I don't have the numbers, but I would venture a guess that over 50%, probably well over 50% of the people that get involved in NFTs don't make much money at all. And most of them probably lose it. Most of those probably lose money on it. You only see those. It's like your stocks, guys. It's like your crypto. The reason many of you got in is because you saw somebody online saying, man, I got into this coin and it did this much in this short a bit of time. And you thought, man, I want to get rich too. But you didn't hear all the stories about everybody else that lost money along the way, right? And so it's the same thing with NFTs, guys. Again, that doesn't mean you can't trade them. It just means be responsible. Understand where you're at and what you're doing. So that way you can make that money with them, okay? Our souls will be tied to an NFT sooner or later. It's only if you believe in souls, right? Hey there, LXT. Good to see you showing up. When am I going to do the giveaways? The first one comes up in 7 days. October 15th, so it's next Friday. By the way, we're going to have a new way where you can enter and get more entries as well. And I'll probably be releasing that this weekend. So make sure you guys are following me on Twitter or in Discord on the free side, whatever. You're just following our server. I'll post the link up there. But we're setting it up where you can get even more entries doing different things if you want to. Or if you don't want to share with everybody else, different ways to get you guys to be able to get in and get your entries for it. But it'll be the 15th, and then I'll be giving away an Xbox or a Xbox Series X or a PS5 each Friday. How many did I say I have? I think I have 6 of them. Yeah, I think I have 6 of them. So pretty much through the end of November. And then, of course, we've got at least $5,000 in Bitcoin that I'm going to give away. We've got some memberships we're going to give away as well, splattered in there. But yeah, we're going to have all that, and I'll let you guys know about that in greater detail this weekend when I get that other thing up, okay? So it's exciting times, but I'm going to do it live here on the stream on Friday. And that's when they'll be doing those drawings on the streams on Mondays and Fridays. And then that way, you see it all happen. Nobody's kind of scamming you or anything and doing all that, guys. Okay? Let me see here. Sheepdog, what's going on? It says, I love NFTs for applications of housing and auto. See, I need to see more about that and see exactly, again, guys, I also come from that legal side of it, right? I've got that law degree. So I'm always interested in seeing how does this how does this intersect with when you're talking about things that have a much more stronger interaction with the law, right? How does it come with that, with the law there? Because the law is not something that's easily changed. The law is very draconian. It takes some real moves to kind of get it changed. Let's see here. What could the differences in price spikes look in the next 2 months for possible manual trailing? It's if you just look at any previous historical point with Bitcoin, when you're getting to those areas, you can kind of see. It's like if you go back here to 2017, right here. And so if you look at 2017 here, this is September here of 2017. This was the low here, September 15th. And I remember when I was in here, because I started TWC back here on the 9th of September. And then we were doing this, and I remember doing the updates, and right around this area, I said, man, things are looking kind of weird here. Things are acting kind of weird. It's not moving like it should normally be expected to. And sure enough, that led into this big, huge bull run here. But your swings can get pretty large here on these larger time frames. So you want to be careful. If we're going to get a move like this, you want to be careful trading those shorter time frames, guys, that you may have been doing up till now. Because it's much more likely to get you, stopped out quicker. So the better play, if we're getting to something more parabolic like this, is to zoom out to a larger time frame. Not make as many trades. And that way you've got more of an opportunity of riding the move up as it does. Let me see here. So that's kind of what we're looking at there for that. If this is going to be that, then we'll probably see something like this where you get these much larger moves. And you had this pullback here. This was in November 12th. So you hit that high up here, November 9th, pulled back 3 days here, December 12th. And look at that, just 3 days. That pullback was 30.5% in 3 days, basically. And then rallied right after it here. You go from the 12th here, broke back out above on the 16th. So 4 days later, another 30.5% on the move up there. Then you had this big one right here as well. You had this big rallied up and then dropped down. Or dropped down and rallied up, but 25% on that. Okay? So the better play, I think, if you're trading Bitcoin into something like this, is going to be the larger time frames. Because otherwise, I think you're going to get potentially stopped out too quick, too often for your own taste. You might not like it. But, again, just my opinion on that, for that. Let me see here. Yeah, there's no way to tip me right yet on Twitter. But yeah, if y'all were following me in the newsletter a few weeks back, I mentioned that that Twitter started this new tipping thing. Not that Twitter was actually doing it. They were just facilitating it, making that connection between you and whatever wallet you want to use. As I mentioned, though, guys, be careful when you're doing that. Depending on who you use, more of your personal information may be available publicly. So make sure you understand whatever wallet you're using, how much of your information is going to be available to the public, and whether you're comfortable with that or not. Okay? They did finally become available for me, later that week, last week. I just haven't enabled it. Boris, it's really going to be a choice for you to make personally. I think your daily might be all right. You're still going to get stopped out along the way, more likely than not, as it rallies there. But I think your dailies are pretty decent, probably a pretty decent overall, generally, kind of time frame to look at. Yeah. Let me see here. Okay, so there's Bitcoin. There was the dollar there. Last Monday, I think we were talking about FTM here, and it didn't even stop at the daily supply structure EQ here, like I thought it might. I thought I might get a move there and a pull back. It said nope. It said it looks like up here, boom, boom, and here we go. And so it's almost hit that initial target up here of that R2 pivot. So, I mean, if you were long in it and you continue to rally right on up through that, you know, you're up about, let me see here. You're up about 80 somewhat percent. So it does pay to check in with us guys and to watch. Many people complain, I don't have the time. You know, that's your choice, right? Let me see here. What else do we got going on here? What about TLT? It's been dropping harder than I would have expected. Yeah, I put that in the updates. There, yesterday was the update. And so, let me see here. Let's get off. Let's do it right here. Whoops. Yeah, let's leave. Go on. And so I've got this potential target. Now I'm looking at this as a flat correction right here. So A, B, and C here. We've got bullish divergence here on the 1 hour building. It's fallen down a bit further. 1, 2, 3, 4. This could be 5 down here. We're not at the 61.8 yet. So, you know, it could continue to break down. As a matter of fact, if I look at this, 1, 2, I think maybe this gets you a 3, 4 right here. And then maybe still got this moving on down. So, you know, again, could continue to break on down here. That 61.8 right there, 140. So if it continues to, I'd potentially look at that area there. But like I said there on the 1 hour, as you can see on the 1 hour there, it does have that that bullish divergence building there. You can see that there's a lot of volume coming in down there toward the bottom, toward right where we're at, and then the volume's abating. And then we're kind of getting a little bit of a bounce right here. But, you know, again, nothing anywhere yet that says this has to stop yet. If we zoom out a bit here to the 4 hour, you can see 4 hours dipping down and oversold here. Stoke RSI is not quite there yet. So, again, I think we could see us potentially heading down a bit lower here. Daily's about to get down in here at oversold. We're just at the, see now look, now we're right around that daily S1 pivot. That 61.8, that 65 gets you right here at this 140 area, 139 gets you right at that high volume node. So I think it's possible we could see that, you know, if it doesn't reverse off the daily S1 pivot here. I think we've still got potentially some lower downside toward this 139, 140 area, but it should be getting into the ends of its decline here. As you can see here, we've got volume expanding and then larger, you know, candle spreads as we came on down through here. A little redistribution going on, continuing down a bit further. But we are getting close to oversold there on the RSI there on the daily. And I think that's going to set it up, especially with the other time frames already being at or below that oversold level, you know, already, or in the oversold level already. I think it sets it up for probably a good reversal coming up sooner rather than later. And if it does, I think, you know, if you know, here on the daily, if I'm looking at the daily, I'm looking for a rally above this swing high right here, 145.46. If I'm trading the daily, that's my minimum level I need to see price get above before I enter. Once we get above that, that's the first start there. I think it's looking good. And then I'm looking for an impulsive rally above that pivot that stays above it. We can get that. I think we're good to go long. If you absolutely have to wait longer, you can look for this wave B resistance here at 151.79. But right now, you know, this kind of gets us this wave 3 well up here to around 176, 178 up here on that. And of course, if this is going to happen like this, then we should necessarily expect that stocks will continue lower as well. You know, this would be the big wave 3. So larger volume, larger candle spread, which would be the same thing we'd expect for stocks coming down, right? If it does. So, yeah. Let me see here. Clove, huh? This is what you want to look at here, Clover Health Investments. Let's see here. I keep telling you guys, man, one of the best things you can do as traders is to have systems and everything set up. And so one of my systems is all my charts. I always start new charts. You know, if I'm updating a chart, I'll start a new chart. Now, every once in a while, I'll accidentally start typing on, start doing the other chart, and I'll save it before I realize it. Most of the time with that, Twitter will let me, or not Twitter, TradingView will let me Control Z back up and set it back where it was, and then go to my new chart. Sometimes it doesn't let me, though. Sometimes it won't let me back out of that. And so the previous chart ends up updated, unfortunately. But most of the time, I do try to create a new chart here. It just helps, guys, when you're looking at your thought process as things, continue on through there. It's a big help. Just one of those tips, man. Good to use. Let me see here. Man, why you got to get me to look at this chart, man? This is not a fun chart. Why? Because this, right here, right around this area here. If I look at this, though, I go maybe 1, 2, 3, 4, 5. 1, 2, 3, 4, 5 is A, B, and then maybe C here. Let me kind of zoom in here a little bit. Let me see if we got 5 waves up off this. Yeah. So this looks like it's maybe 1, 2, 3, 4, 5. So again, A, B, C here. We're bouncing off the S1 pivot, which is a pretty strong thing there. That's what you want to see. Let's see here. This is the 4-hour S1 pivot. We're rallying above the pivot, trying to break on out. Of course, this 4-hour pivot will be gone at the end of today when the market closes. So jumping back out here to the daily, you can see we're going to have some resistance right here at this high volume node without worrying about anything else. You can see we're going to have it there. If we look at why we're going to have it there, it's because of this right here. See all this price action happening right in this area? Most interest is right here around $8.15, $8.20, looks like. So if you can rally on up through that, if you can rally up through that, you should be able to use it as support and continue on with that. So that's my first thought of it. Let's see here. Data, for sure, man, for sure. Let me see here. This is pretty big here, so I'm not usually a fan of doing this way. But it looks like we're kind of coming up at it at the moment. Let's see here. Man, do you guys know how much I love y'all, man? Seriously, I have been doing this since 2018, and a lot of y'all have been around pretty much most of that time. And, man, I just want to say thank you. I really appreciate you guys, following along. I don't I don't have 100,000 people following me because I don't just jump on the moon train with everything. I always give thoughts about what's going on, really kind of thinking about it and whatnot. So I appreciate you guys hanging around. My streams are a bit longer. I don't give you sound bites because sound bites are going to make you lose money, guys. Please understand that. So there's this bit of this kind of wedge thing going on. And while this isn't the type of wedge I normally like, what we can take from it is that price is getting supported more and more here. So you're getting more and more overlap. Prices come down, large move down, right? Large move down, right? And then it starts smaller and smaller moves down. And so that's what you want to look for when you're looking for a reversal. It doesn't guarantee it's going to happen. Sometimes it might just give you a bounce. But, often it's going to be your reversal in there, right? Let me see here. Let's see. We've got this rally right here. So we've got some volume coming in at the top right here. You see that volume spike? We've got even more volume coming in up here. It followed through to the lower end here. Volume again dropping off. Less and less interest down here. We've got what appears to be a bullish engulfing candle, and then not much of a confirmation yesterday, but today's candle does appear to be confirming that reversal. So I would say a breakout above this descending resistance is going to be that first clue that bottom may be in. An impulsive rally, which means expanding volume, larger candle spreads through the daily pivot, and you really kind of want it to remain above that daily pivot. I think that's going to be your big clue that bottom's probably in. But you're definitely going to want to see a breakout above this swing high right here to feel pretty secure about the bottom being in. So the way I do this, guys, is that there are no guarantees, right? So we're always looking for information to help support what we're doing, right? What we think's happening. So for me, the first bit of information is the breakout of this descending resistance. Now that doesn't guarantee it won't continue lower, but that's the first clue that bottom may be in. If I can see not just a breakout, but an impulsive breakout above the pivot that remains above the pivot, it can come back and kind of test that pivot area, dip down below just a little bit and then back up. That'll be fine as well. That'll be a bigger clue because that pivot's important. The pivot is significant. And we can see where it comes here. If we look at the volume here on the side, this VPVR, you can see that this area is where most of the market is interested in. So if you're getting above that area, this acts as support. If you're below it, it acts as resistance. That's why impulsive breakout will get you through the supply that's there, and then it pulls back and the supply flips to demand. But really, you need a breakout of this one right here to kind of say, okay, that bottom is most likely in. Okay? And so this level here is 1113. So we get this up here. So yeah, that's the do or die level right there. So depending on how much risk tolerance or risk aversion you have, you know, if you're more risk tolerant, you might enter down here. But I'm going to tell you this though, if I'm entering on the breakout here, my stop loss is going right below the swing low here. So is that 707 right there? Dropping below that, I'm out. I don't care that it may just kind of go a little bit further and back up. No, because if this breaks out of here and I'm thinking that bottom's in and it drops below that, then I don't know what's going on at that moment. And I'm going to get out just in case, because the reality of it is we moved in sideways between the pivot and the S1. So you can get this breakout, get rejected at the pivot and come all the way down to the S1 and then reverse off that S1 and head up. So until we either get a bounce off this S1 or an impulsive breakout above the pivot, this is kind of no man's land here. So if you're more risk adverse, you might wait for that impulsive breakout above the pivot, or better yet, a breakout above this 1113 here. Now, long story short, if we get that, we should be looking for, you know, we're running on the premise here that this is a 1-2, right? That this is a 1-2. And so that gives us a 3, a minimum wave 3, up there at around 43.11. Now you say, Chris, how could that be? You said the economy is going to go off a cliff, man. Right? Well, here's the thing. Clover Health Investments Corporation. Most things health-related, especially if they're things like, hospitals and whatnot, are going to remain supported even in an economic downturn because people still have to go to the hospital. People still have insurance. They still got to go to the hospital. They still got to get seen. They're still going to get sick. So even in depressions and recessions, you know, your health-related stuff in general should do pretty decent still. Okay? Remember, just because there's a recession or a depression doesn't mean everything goes down. During the Great Financial Crisis, 2008 into 2009, when the markets where everything was dropping, Dollar Tree, I believe it was rallying up. Yeah, that's one I can think of right off the top of my head. So, you know, everybody kind of went to, hey, we're going to buy cheaper stuff. We're going to go to Dollar Tree while all this stuff's going on, right? And losing money and whatnot. So don't think that just because the market or the economy itself is looking like crud, that everything's going to go down. Most things will. But you're still going to have things you're going to do. If you've got government upping its spending on defense, which often happens during depressions or recessions, recession is what I meant to say there, then yeah, you know, you're going to look at defense contractors probably, or those that provide intricate parts for those defense contractors. Yeah. Ah, man, I love you guys, GT. Let me see here. So yeah, so I mean, you know, that's what I'm looking at here, and that, you know, should get us up eventually up here. You know what? Wave 5 has a minimum expected target of around 51.5. Minimum expected because we'll probably overextend at some point in there. But if we break down below this wave 2, at any point, that invalidates what we're doing here, right? At any point prior to getting 5 waves up, you know, 1, 2, 3, 4, 5. Okay? That's your kind of bottom area there. That's a pretty big, is that a pretty deep pullback? Maybe it's just log. Let me see here. Yeah, no, that's, you know, that's a 90+% pullback there. So the other possibility is maybe this is an ABC and this is an ABC because it drops below the 90. If it is, you still expect price to get above, most often, this swing high up here at 28.85, because it'll be a flat correction on the way down. A, B, C for A, B, C for B, and then you have 5 up that should take it above that. You know, does it do that? Maybe. You know, we're down here around, you know, $7 and some change on that low right there. But if it does, it's going to go lower than this over here when it does. Lower than 631. So we'll have to see. So, you know, I mean, even still, it's still a great rally, right? Even if you wait till $11.13 here to get in, you're still potentially seeing it getting up here around $29, you know, $29 up there. So it's still a good bit of money to be made in it. But this sideways, kind of iffy about it. But again, if it does just pull back and drops below wave 2 here, you're just going to have to wait and see. Do you get a rally somewhere? You know, if it drops below this swing low from here, you know, if it goes up, gets rejected pivot, drops down here toward the S1, so it drops below this swing low, well, this count is no longer valid, right? But in that case, I would look for a potential reversal at the low here. Maybe this is just finishing up the move down, and then it rallies from there. So again, you know, you've got to be careful. Just because I say, listen, you got this first. Sometimes when I say these things, people don't listen, and they think, oh, if it gets above here, it has to go up. It has to, right? It doesn't have to, guys. That's just the very first kind of pay attention now clue, right? But you really need it above 11.13, which still doesn't guarantee, guys. It still doesn't guarantee. But if the count is correct, if it's a 1-2 there, that's wave B. And so if you break out above that, that means you've locked in this as 3 down, the same way as what I talked about here. 1, 2, 3, and then you break out above wave 2. Well, that's an ABC now. That's corrective. Should be heading up. So that's what we'd be looking about with that right there. Oh, that's all. With that right here. All right. Let me see here. Yeah, we're going to be giving out a lot of tier 3 memberships, guys. I think I've got 10 yearly and 10 6-month. So, you know, yearly usually runs if it just on the discounts. If you're not paying month to month, if you're paying month to month, the yearly is going to run you about $2,400. If you buy it up front, you can get that discount down to around $1,500 or so. And, you know, so every once in a while I'll get somebody on there, oh, it's too bad that you feel that you have to, you know, that you're going to charge that much or whatever. And you know what, guys? At the end of the day, I do a thing here that has the ability to make you a lot of money. And, you know, it's not guaranteed. You know, again, guys, it depends on how much effort you put into it. All I can do is give you the information and to answer your questions and to try and help you out as best I can. But at the end of the day, you have to be open to learning and to putting in the effort and the practice and abiding by the things that are going on there, right? But, you know, this idea that I put in, 80 plus hours a week doing TWC, at least, and that doesn't really count the weekends. I do work a lot, all day long, guys. for you to think that I need to do that and not charge, I think is kind of ridiculous. And I don't mean any of y'all, of course. But I just mean, that I feel I need to address this because I do get these occasionally. And it's all about your mindset. Your mindset's wrong. You can go online and look for free information all you want. And like I said, you can learn to trade online. But the trade-off without paying somebody like myself to help you get ahead of the game and to understand what's true and what's not to begin with is that you're going to have to lose a lot of money figuring out where the half-truths and the outright lies are in the information that you're getting online. And so, it's up to you. It's your way. I keep telling you guys, me personally in my life, I've always felt that if I want to learn something, I go find somebody who knows how to do it really well, and then I pay them to help me kind of make my way through it, right? It's the same thing that professional musicians, professional, and I'm talking like symphony, celloists and percussion, stuff like that. Professional athletes, actors, it's the same thing they do, guys. And, it's because they want to do what they do as well as possible and avoid as many pitfalls as possible. So if you ever were of that thought that, man, people should be doing this for free, hopefully that helps you understand the way you should be thinking about it. And not to mention, it's time, guys. It's time. Every moment I'm doing TWC is a moment that I have to take away from trading. So for me, that's worth a lot of money. So just some thoughts on that, guys. Whether it's for me or anybody else, I don't want you going in there and thinking, oh, they should be doing it for free. Because I think that's a lot of the problem in the world today. Everybody wants something for nothing. Nobody wants to understand, what goes into something. They just think, oh, it should be provided to me. Well, beyond all that, psychologically, when you actually have to put forth some money that you've had to work for, that you've had to make, and you have to part for it, you have to exchange for that. For most people, it makes them pay more attention, makes them more serious about it. If you get something for free, it's like, you kind of half-ass all the way through it. So, just some thoughts on that, guys, okay? Let me see here. White says, I think these streams are great for starting traders to get back to reality. They really help me as a weekly checkup on emotions when trading. Yeah, and that's what I hope it does. Yeah, sure, I'm going to let people know we have what we have. But even if you don't come, I hope that you get something out of the stream, that it helps make you a better trader. If anything, it helps you, like what R21 said there, it helps center you again. It helps get you back off the FOMO, off the euphoria, and to get back into think appropriately for what's going on there. Okay? My pricing is very reasonable. Thanks, I appreciate that. The reality of it is, for as much as we offer, we're actually way below what we should charge. But, for me, it's always been how many people can I possibly help doing this, but still maintain some kind of decent level of pricing on it. When you're in business, you don't want to underprice yourself, and we are, but it's with the goal that hopefully the people that are coming in, that the price is high enough that they're serious about learning. Because otherwise you get people that come in and they don't really try, they don't really put forth the effort, they don't really listen or pay attention, and then they go, oh, it doesn't work. Well, it does work. I've been doing this for 25 years. It does work. It's all up to you to decide if you're going to make it work, right? Let me see here. I've got one here. Only a few dollars, Tree. Let me see with you guys, man. Yeah, that's right. Anyone that needs free info will rarely use it. Yeah, I agree. Can I check out .USDT? Sure. This is one of those ones that we update daily in Discord. So this is actually from yesterday. And so looking at it here, I think that we might have a locally here. It's a little sketchy locally here because we have all this overlap. But I think we've got a 1-2 and then a 1-2 and then 1-2 working its way up here. And so of 3, we've got circle 3, which may have a target up here of 46.40. But what we need to see is a breakout above wave B, wave parentheses B here at 35.90. Now, if this is this is such a, like I said, guys, this count right now is kind of iffy. What I like about what's going on with DOT at the moment here is we're sitting above that 1 hour, 4 hour pivot. We rallied up above it, came back, tested support successfully, ran up to the R1. Pulling back. Right now, we're just finding support on this previous resistance here. So I could see us potentially rallying up from there. And I think it's even possible here. Let me see here. See, we're looking at maybe this kind of 1, 2, 3, 4, 5 here, but I think it's also possible that this could be 1, 2 of 3, right? And so coming back here, A, B, C, maybe done on that. So if we get this breakout above the swing high here, I think we're going to say that this is this number 3, wave 3, with the target up here of $40 basically. So that'll be this wave 3 up here. If we continue to break down here, then I'm going to look for this 38.2 down here at 31.46 for wave circle 2. So I think that's kind of where we're at the moment here. If we do break on down, continue to break on down here, we'll look for this. Basically right around here between that 38.2 and that 50, which gets us the pivot and the ascending channel EQ. So right in that area is where we'd look for that to rally back up. But again, if we do break on out above here, I think we may be looking at wave 3 up here at $40 or so. So it's going to depend on what happens kind of in this range right here for that. Let me see here. GT makes a good point here. He says, if you're too broke for the course, you're too broke to be investing in the first place. And I definitely really kind of agree with that, guys. I know a lot, and before you get all, your feelings get hurt here, listen to what I'm saying. Investing and trading are serious pursuits, okay? They're not games. They're not, it's not like buying a dollar scratch off, though most new traders treat it that way. And again, that's part of the reason why y'all end up out at, in 3 months, 90+% of y'all in 3 months, right? And most of the rest of y'all just continuing to feed the machine while you continue to lose money for the next few months. The reality of it is, guys, and people have asked me this, and I continue to say it, if you want to get started in trading or investing, I think a minimum, I think you should have 60 to 80 grand to begin with. You should have 6 months of your bills paid for, okay? Now, the 6 months of bills paid for, if you've got 60 to 80 grand sitting there side and you've got a job that pays all your bills and everything, okay, go for it. But if you're doing anything else, which is what most of y'all are, right? You have to understand what you're doing to yourself psychologically. You're making yourself feel like you have to do these trades. You have to be in every day. You have to make so much money every day, every week, every month, or whatever to do it. And the problem with that is that it causes you to take trades that you don't need to trade. There are days, I will continue to say this, guys, there are days that just are not worth trading, days that you shouldn't be in the market, okay? Because they're just not clear enough. The best thing you can do is just wait for the best trades. Just wait until something screams, oh my gosh, I need to be in this. And not because of FOMO, but because you've got some huge divergence, because you've got whatever's going on, some kind of macro, some kind of technical thing on the chart that just screams that price is doing what you think it's going to do. Most of y'all, the only thing screaming is FOMO. And again, what that's going to do is it's going to cause you to lose more money. So, I mean, the long and short of it there, guys, is that you really should have a decent amount of money to get in and do it successfully. Now, that's the generalization. You can come in with less money. But unless you recognize what I just said, unless you understand that and you take that to heart and you really accept that, you're going to be that case where you're going to just be trying to get in just to get in and FOMOing in and losing money left and right. you have to be realistic about where you are as a trader, guys. If you're coming in with $1,000, you need to be thinking, man, I've only got $1,000. I don't have 60 in there. And so I necessarily need to scale down the size of my positions. Part of what we discuss at TWC is proper position sizing in regard to risk management. I've got a whole section on it that tells you how to get your proper size and do you use proper, risk management. And what that means is if you've got $1,000 or something small like that, it's going to take you longer to get where you want to get, guys. Don't try to turn $1,000 into $100,000 yesterday. That's why most people are losing their money. Every once in a while, somebody get lucky. Like I said, the NFT mint thing there. But guys, you got to understand, NFTs really aren't trading. It's kind of like Beanie Babies at the height of their existence, where you just bought it because you knew somebody else was going to buy it at a higher price, most likely. But even with that, most of the people still lost money. It's going to be the same thing with what's going on there, right? Same thing that goes on with your trading. Okay? The goal is just to be realistic with where you're at and then start from there. If you can do that, then you can trade with smaller amounts, guys. But often what traders do is they come in with a small amount and they try to compensate for that by oversized, over-leveraged trades. And they don't know what they're doing to begin with. So they're already most likely going to be wrong with their entry. And on top of it, they're going to be wrong with a large position size, too large a position size, and way too much leverage. And then it'll go against them and they'll get liquidated or they'll short cover, but they're going to lose a significant amount before they do. So when we say these things, guys, it isn't to make you feel bad or to make you feel like you shouldn't be in the market. It's just to get you to understand the reality. Most people in life in general, guys, don't want the reality. They don't want to, they just want to live their own life where they think whatever's going on is going on and that's the way it is and doesn't matter what the information says otherwise. Don't be like that, okay, guys? So yeah. It just, I hope you guys really get that. I hope you're not so, hurt emotionally by what I just said that you closed off and didn't listen. It's so important. Again, guys, I keep telling you, if you're here, I take that seriously and I want you to be successful as a trader. But that doesn't mean that I'm going to tell you what you want to hear because you want to hear it because it makes you feel good. I'm going to tell you what the truth is. And if you really want to be a good trader, if you really want to do well, you're going to listen. And you're going to make the changes you need to make sure that you're not creating this loss for yourself. That could be completely kept from happening, right? That you have complete control over. Okay? Let's see here. Let me kind of catch up with you guys here. Kimasawi says the absolute best investment you can make is in yourself. Before I even started trading, I did 30,000% return investing in my business. Yeah, exactly, guys. I'm a firm believer in education, knowledge, skills. I'm a collector of all that myself, and I just believe that you're a better person all around the more that you learn. The activity, the actual going out there and learning keeps you young. I mean, literally, it keeps your brain young. It helps thwart off other diseases and stuff in your brain. And so I'm just a firm believer in it, guys. I'm always learning more. I'm always trying to expand what I know, whether it's skill sets or knowledge of some sort, or even, education of some sort, right? Let me see here. Let me kind of catch up with you guys here. Kind of see, I saw there was a question there. Can I check comp USDT? Yeah, let me see here. Let's see. Oh, there we go. This is one I talked about in the newsletter, guys. Right now, I think we may be on a flat correction here for wave 2. And that's because we have this here and then we have this here. Now, It's possible this could be a 1, 2, 3, 4, 5. But, you know, as a leading diagonal. But the problem with that is that this isn't dropping down into wave 1 here. This would be 4. 1, 2, 3, 4. And while there's very rarely you'll get it where wave 4 doesn't drop into wave 1 as a leading or any diagonal, you should generally treat it that it should, you know. And so it doesn't. So again, I think we've got, you know, this 1 here, and then A, B, and then this kind of 1, 2, 3, 4, maybe a 5 here for 2. Volume-wise, you can see that we've got this volume rally right here at the lows, and price then is heading up, right? So we've got almost a hammer candle here. We had the spike of volume come the one right before it. Just ended up a doji. See how the candle spreads got larger and then they got smaller here, and then you got this long demand wick here, and then it's rallied up. You got this bullish engulfing, and you've got this one trying to confirm it here on higher volume. So I think, you know, this may be done right here. What we need to see is an impulsive rally above the pivot. This is the daily pivot. If we can see that, that's going to be a good clue that the bottom's probably in. But we really need to see a breakout above wave circle B up here at 528.60 to add confidence to that count. And then in that case, that's going to give us a wave 3 target here of right up here in the R4 pivot, right around 823. And with that, you know, again, I think we've just got a 1, 2 here. I think we've got a 1, 2, 3, 4, 5, 2. So that gives us a minimum wave 3 up here at about a 1539. Sounds crazy, but, you know, again, guys, if comp gets this whole bug issue fixed and whatever, because, you know, they have that governance thing on there, which means they had to wait a week to update the fix, right? So if they can do all that, recover, I mean, you know, Q4 coming into the run, I mean, everything's going to fly ridiculously, guys. You got a bit of a descending, what you call it here, wedge going on there. So yeah, I think, you know, we're breaking out here now, I think. If we can get that breakout there and, like I said, rally impulsively above that pivot there on the daily, I think we're good to go. But definitely want to see it get above 528.60, and then we'll look up there at that 800 area for wave 3, and then the larger wave circle 3 up there around 1539. What's up, common man? Better late than sorry, right? Let's see here. Let me kind of see what's going on here. Yeah, I know Hank today. He must be changing hotels again, right? PLTR. I know you guys, somebody was asking about another one there, and I'm not sure what it was. Let me know, you know, don't be afraid to ask it again right now, because I'm asking you to ask it again. And I'll see what we can do there. PLTR, I don't think PLTR looks terrible. I think potentially bottomed over here at 2302. Let me see here. I think we've got that ABC down. Let me see. What's this whole thing here? So far, we've retraced at the lowest there. Right here. See, we're already just about 61.8 on that. So I think it's a pretty solid wave 2. Again, look at this as 1 up here. And then we've got this AB. And then maybe 1, 2, 3, 4, 5. That's what I'm kind of looking at here, maybe. Let's kind of zoom in here a bit. It's one of these. Let me see here. Um, see, this could be a 1, 2, 3, 4, 5 as leading diagonal. A, B, C potentially. You can see that we're here on the 1 hour. We bounced off the bottom, oversold, crossing bullishly now. So I want to see that to rally up. We want to see it get above this level right here, this 24.94. We want to see it get above there to begin with, to feel like, okay, maybe the bottom's in there. You know, because we're coming down pretty close to the invalidation level here at 23.02. I would say, normally what I would say is, you know, if we break down below that invalidation level, we'd look for a bounce here or a reversal at the S1 pivot. But in this case, you know, this is a stock, so this S1 pivot here is going to be gone at the end of today here in just a few hours. So, you know, we'd have to see where those new pivots start out next week and kind of look at where that's at. But it does look like there's potentially 5 here. It looks like there's a 1, 2, 3, 4, maybe 5 up. We've got 3 down. So, actually, you know what? Maybe not. We've got 1, 2, 3 up here. This could be 1, 2, 3, 4, but man, you know, we cut it so close, not get under that. So we might still have it coming down here a bit. This might be, you know, a 1, 2, 3, 4, 5 coming down here toward that. Maybe the 50% level or 22.35. I'm just, you know, until you get a breakout above this 24.94 here, I think, you know, you're kind of getting in kind of risky prior to that. I think if you get up there, that's a good first start. But then, of course, you want to see it getting above that swing high up there, that wave B. Yeah. But, you know, again, looking for that wave 3 to kind of hit the EQ up here of this supply structure right around $42. I think that's a good target when it does that. If this continues coming down, we can look for wave 4 here, support. That's right there, $20.55. It's about the S2 pivot here. So maybe we get an A, B, and then a 1, 2, 3, 4, 5. Maybe an ending diagonal. Because often your wave 4, the lesser degree, is where your wave 2 or your wave 4 kind of gets to. That's usually a good place to look for that target. Right now, we've filled in this gap right here. So that may be all that's needed right there. You can see we gapped here, and then we gapped here as well. But you can also see this doji gap right here. Another gap right here, all along that same area. So I think if we can turn and rally off that, I think that's a strong area to rally off of. That gap area there. Right there, going through it. Yeah. It's not some WSB, Wall Street Bets Yellow. All right, let me kind of catch up here. Let me see here. Jose, what's up, man? You want to look at the S&P real quick? All right, you're next in line. Let's see what we got here. Oh, we'll look at the S&P E-mini since that's what I've got here on the charts for Discord there. By the way, if you're tier 3, remember we had the internet outage yesterday. So we're doing Elliott Wave today at 3 p.m. Central Standard Time. That's in just over 2 hours. All right, so make sure you guys show up for that or check it out on the replay as always. Let me see here. Looks like we can get a 1, 2, 3, 4, 5. So 1, 2, continuing down here. We have this ABC up here almost to the 78.6. So again, it looks like we might have a 1-2 done right here. That means locally we get a 3 right around the 38.2 retracement at 43.40 or so. That would give us a minimum wave 5 there at 43.25, and that's just starting out coming down. But wave 3 would have a minimum target down here at around $4,023. That wave 2 up there. What we're looking for confirmation is a breakdown here below wave B, wave circle B there at 42.6750. If we can get an impulsive breakdown before the end of the day through this pivot here, through this wave A, wave circle A, wave parentheses 3 kind of resistance there, then I think that's going to be your first real clue that that top may be in. You want to see a large candle spread, large volume coming down through it. And hey, if it could go back up there and recheck that resistance or that support as resistance and then get rejected, that'd be even better. But definitely need to get it down here below 42.6750. But that gives us that wave 3 down there around 40.23. Let's see here. OMG USD. Let's see. Yeah. Looking at 2 possible counts here. I put this in for tier 3. I had a request for this a couple of days back, it looks like. I've got 2 possible counts here. One is the black count, which says wave 1 is done. Wave 2 is in progress down here toward this 38.2 retracement at this high volume node right around 375 or so. The other one suggests that maybe that we've still got wave 5 in progress here as ABCs. And so in that case, maybe A is done up here. So we've got a 1, 2, 3, 4 is a triangle, 5 up. B may pull back to the pivot here, right around 10.376. And then rally on up here toward 29.3, right around that area. That's that daily R5 pivot. And then we'd still look for 2 to come on back down here toward this down here. So either case, I think we're still pulling back overall. The question is, do we get a rally from this triangle area here, the pivot? Or do we continue down below that triangle, in which case that black count's really added confidence there, and we're looking to get down here and then up. So yeah, that's what I'm looking at. Let me see here. Litecoin is definitely not dead for trading. You should definitely look at it. You should. SHIB, I mean, we can look at SHIB, but you guys got to let me know. Is it USD or is it, BTC? So let me know that. Let me see here. Look at BABA. Let me get rid of some of these here. Kind of clean up some of these tabs I've got going on here. I got all these ones I'm looking at for you guys. All right. BABA, huh? Isn't BABA that one that just keeps dying? Alibaba? Yeah, I don't know. Let's take a look here. Looks like I got a weekly count from back in August. Yeah, that thing just keeps dying. Now, we're pretty close to this invalidation level here, but here on the weekly, we've got bullish divergence here between the week of August 16th and the week of September 27th. So, that's the first thing I'm noticing here. Oh, gosh, dog it. Gotta change this up here a bit so I know why I've got it there. Yeah, so we've got that bullish divergence there. Stochc RSI, whoops. Stochc RSI bounced out almost off the bottom here, pushed out, came back, and is now trying to rally back out, break out bullishly on that. Got a nice large outside bar here. Bullish engulfing outside bar. Let me see. So we may actually see it looking something like this. Let's see here. Maybe something like this. Yeah, that's a great candle for today, though. That weekly looks good. Let's kind of zoom into the daily here. Gap up on the 7th. Coming up here into overbought. We are pressing up through the pivot. So that's, as always, you know, the one thing I look for first thing. But more importantly in this count here, locally, we have a breakout of that descending resistance. Which actually is a descending wedge, it looks like. And so that potentially gets you a target here of about $35.18 above the point of breakout. That gets you right up here at about 189.32. That same area is kind of where you're finding this gap right here. It gapped down and then gapped up right in that same area, so definitely something to watch there. It's just above the 61.8 retracement. But yeah, this right here is looking pretty bullish at the moment. We just want to see it stay above it. Right here on the daily, you can see this bullish divergence building. All the way up there. So, yeah, you know, I think... let me see here. Where are we looking at this? A weekly. Yeah, I think if we're breaking out above this descending resistance here, which comes off those 3 points, so it's a pretty significant resistance. 1 point is just a point. 2 points is a line. 3 points is a trend, guys, okay? So we've got 3 points on this line. That's a trend. So a breakout above that should be a reversal of that trend. So you can look for that breakout above that. Weekly, you know, again, impulsive breakout above the weekly pivot would add a lot your way. Wave B up here, you know, this another level you'll look at there is 274.29. If it's in there, if this is a wave 2 and that's a wave 3 coming up, give us a wave 3 target up there of about 558.60. A little bit higher than what I had it because it went down further. But 558.60 would be that wave 3 target on that. So yeah, that's what I'd look at for that one. Just playing out there. Let me see here. C98 USDT. Let's see. C98 USDT. Let's take this down a bit. So I think we've, looks like we've probably broken out there. Let me see here. Yeah, it looks like it might have an ABC done there. Look at that. It's a nice channel, bull flag. EQ works well as support and resistance. Breakout, come back, retest it as support. This should give us a pattern target here of 2.425 above the point of breakout. So that gives us a pattern target of about, I'm probably just a little bit off there, but about $6. Let me see here. Is that 4 up? 1, 2. Let me zoom in a little bit here. So we got a 1, 2, 1, 2, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 1, 2, 3, 4. By the way, you notice on the 4 hour we're sitting above it. So I think that's 4 there. Probably got a 1, 2, 3, 4. Look for that 5. Yeah, I think we may have an A, B, 1, 2, 3, 4, 5 coming down there. So we're looking for a breakout above this swing high right here at 39.84. Let's do this real quick. All right, that's what I'm looking for. If the bottom's in here, which it does appear like it may be, that'll give us a minimum wave, parentheses 5 target there of 4.71. And then that should give us a decent pullback here for a 2. Yeah, look at that 50% retracement there. So I'd be looking for that to pull back to this 38.2, 50% area. The 38.2 you can notice is right here with the high volume noted about 3.82. So I'd be looking at something potentially like that playing out. And that could eventually lead to, you know, if this reaches this point here and then pulls back here, let's say to 38.2 right there, up here at 7.045 and then 7.808 to get you wave 5 up there. So there's your 3. There's your 5 up there, 7.8. So yeah, that's what I'm looking at there. Let's see here. SHIB USD. Let's see here. All right, last one, then I got to go, guys. It's 1 o'clock. Let's see what we got here. All right. Oh, everybody wants to know about these, but these are always the more difficult to figure out. Are they done or do they have a little bit further to go up because it's such a large move here? What can we see here, though? It looks like accumulation here. We have the spring right here, high volume, drops in, push right back up. Let's see here. Then it rallies back up here to the top. Volume coming in, supply coming in at the top, pulls back, and then rallies up through it. This is what I keep telling you guys. Y'all are worried a lot of times about whales and everything coming in and making it do what they want to do. Look at all this volume that came in up here at the very top. And all it did was pull back to this previous area of resistance as support. There was no follow through. This is the fear that all whales, if they know anything about anything, have. This is why they're not just going to dump on you. Because stuff like this happens. and it doesn't end up going down lower. It just gets caught and rallies back up. As I always say, if the market is bullish, you're not going to be able to stop it. If it's bearish, you're not going to be able to stop it. You can notice we hit this supply structure up here. Got rejected. Boom. We should be looking probably for a rally up here to about that 42.30 area, 42.25. I guess 4200 to 4230 kind of area, right around this EQ. Zoom down a little bit here. So we got a 1, 2. Yeah, so say 1, 2, 3, 4, 5. 1, 2. Yeah, I think this is a 3. Looks like, and this is a 4. Which I think will get us at 5 up there. So that stops us just shy at about 38.65. And then if we do it this way, this will get us a higher target. Potentially as high here as 42.58 or 45.28, sorry about that. And so right between all that is almost exactly between it here is that EQ. So, I mean, if you want to launch it, you know, if you're breaking out above the top here, you look at a minimum of 38.65, potentially a maximum of 45.28, but more than likely probably somewhere around this 4200, 4230 kind of area at the EQ, I think, to finish that off. Okay, guys? So I think it's where that. But you remember what I always tell you guys, the longer you're accumulating or distributing, the further, the stronger the breakout and the further it goes, right? So there you go. You had this accumulation here from June through October here. And boom, takes right on out of there. As you can see there on those mid time frames there, you've got this bullish cross and oversold here. You've got, let me see here. You've got hidden bullish divergence right here. This is the 6 hour, by the way. Six. Yeah, so it looks like, you know, again, heading on up out of there to head up toward that target area like that. 4 hours, you still got the same kind of thing there. You got this bullish cross about to break out of overbought, or I mean oversold. 8 hours even starting to cross. You look at the 8 hour. It's getting ready to cross bullishly there. With another almost 6 hours still left in the 8 hour candle. But yeah, you'll notice we pulled back to this area right here. So that makes a lot of sense. Right above this one. So yeah. So I'll be looking for it, okay? Anyway, guys, there you go. So that's it. As always, would absolutely love for y'all to join us at howtotradetowin.com. But whether you do or don't, I hope you guys come back on Tuesday, 11 a.m. Central Standard Time. Check us out. We'll be doing this again. I don't think the dollar, again, I don't think the dollar's going to miss a whole lot on this. I think worst case scenario, tapers put to December, but I still think there's a good chance it might go in November due to the revised August. The fact that we were up almost 200,000 jobs this month, plus, really importantly, the unemployment dipping down from 52 or 5.1 to 4.8. You know, it was only expected 5.1, so a huge move down in unemployment. So, yeah, I think it's still doing what the Fed wants it to do. So, don't be surprised if the dollar's, you know, if we get the taper coming in like that, taper talk like that, you know, dollar's going to get bullish on it. So, Knee-jerk reaction today? It looks like, maybe. Okay? I really appreciate you guys. Have a great weekend. Trade safe. If you're in Discord, of course, I'll see you guys over there in just a bit. But as always, guys, everything else aside, remember, the only thing that you control in the market is how much you lose. That's it. Risk management is the most important thing that you're going to do every day in and out as a trader, okay? So make sure you spend most of your time doing that and getting better at it. That's where you make your money. Y'all take care, and I'll see you next week. Trade safe.